Let's talk about what everybody is noticing, but not everybody understands. The real estate market is shifting. The term buyer's market is being thrown around a lot, but not everybody is actually breaking it down in a way that real estate investors can actually understand it so that way they can base decisions off of it. By the end of this video, you'll not only understand what a buyer's market is, but you'll understand how to adapt and thrive in it. Top of the top, y'all, it's your boy Real Estate Show back for another video, and today we're going to deep dive into what exactly a buyer's market is and what you need to do to survive this market, because a lot of investors won't, especially people in the wholesale space. Let's talk about it. So a buyer's market happens when inventory outweighs demand, meaning there are more houses on the market than there are people actually buying those houses. Here are a couple characteristics that will help you understand if and when we're actually in a buyer's market, and you will know when I mention these that that's exactly what's going on right now if you active in the game. First off, you're going to see a lot of sellers offering price drops or buyer concessions. And I know this is happening because I get Zillow notifications every day. And I just recently sold the flip property where I not only had to drop the price, but I also had to include $5,000 in buyer's concessions in order to get the deal closed. You're seeing houses sit on the market a lot longer. So more days on market when we're in the buyer's market. Also, buyers have the ability to negotiate the price way down. Now, in 2021, 2022, sellers could come up with whatever price they wanted to sell their house for, and it was getting sold quick, sometime above asking price. People were paying above market value in cash in a lot of cases to buy properties a couple years ago. But now, buyers can come in and say, I don't like the color of that paint. I'm going to need $3,000 off the purchase price. And if you're a smart seller, you're going to go ahead and give them that $3,000 just so you can get off of that product, or else it's going to keep sitting on the market with the rest of the inventory. And this didn't just happen overnight. This has been developing for quite some time, especially when we started to see interest rates start to hike. That's going to decrease the people who even have the buying ability. Higher interest rates equal a smaller buying pool, because now the people who could afford a $350,000 house in 2022 can only afford a $250,000 house just based on the interest rates and how that shifts. So that decreases your buying power when the interest rates go up. Less affordability equals lower sales. And if you're in the wholesaling game like I am, we started to see a lot of our institutional buyers even pulling back. Now, don't get me wrong, they always had a very strict buying criteria, but in the event that we found a house that fit within that criteria, they were paying really good money for properties that we were coming to them with. But now the same hedge funds that were paying, $180,000 cash for a property are now offering us somewhere around $150,000 for a very similar property. And some of the hedge funds are not even buying right now, or they've altered their buying criteria to put more stipulations in. So the house that they would have bought a year or 2 years ago is not even a house that they're interested in today. And on the flip side of that, sellers don't typically understand what's going on in the market because they're not involved in it every day like we are. So what we're experiencing is we're seeing sellers expecting 2021 or 2022 cash offers, and if they don't get those offers, then they're just holding on to their properties. It's getting tougher and tougher to find real motivated sellers unless there's a real hard distress point involved. Even outside of institutional buyers and hedge funds, our traditional cash buyers are being a lot more selective than they were just a year or 2 years ago. I remember the days when we could sell a house at 80 to 85% of ARV, but now they're getting a lot more stricter and they're wanting that 65, 70% of ARV when they pick up these properties. Now, if you fix and flip properties, you feeling the pain because, like I mentioned earlier, that house is sitting on the market a lot longer after renovations than what you're used to if you've been in the game for a while. Now, if you're a newbie, then you need to go ahead and expect for your property to sit on the market for 3, 4+ months potentially. So make sure you have that cash reserve to pay that interest and anything else that comes along with holding a property. We're also seeing appraisals coming in short. So people are trying to market their property based on the highest sold comp in the area without averaging it down. So they have a property listed, let's say 400,000, and then the appraisal comes back at 375,000. That's a $25,000 haircut. And a lot of them don't even have that type of margin to take that type of loss. I mean, it's really hurting fixing flippers out here. And I understand this because one, I'm wholesaling and selling to end buyers, people who are fixing and flipping. I am a fix and flipper, and a lot of my associates also fix and flip properties. And because the sellers are expecting more money, but the retail buyers are wanting to pay less money, wanting price drops and concessions, that means it's a lot slimmer margin on those deals. Whereas we used to be able to make 50, $60,000 easy. Now, making 20, 30 grand on a flip is a blessing if you can get it off the market. Now, if you're a buy and hold investor, aka a landlord, it's getting tough for you too out here. Higher interest rates equal less cash flow. And if you're buying long-term properties, you want that cash flow. Now, if you're in Dallas, Texas, you may be buying just for the appreciation value of the house, and that's not going to stop, but a little cash flow would be nice. All right, now we talked about what a buyer's market is and the effects that can have on investors. Now let's talk about how you can pivot and still win. For starters, you can't afford to be average on your offers no more. We need to be shooting for between 60 and 70% of ARV minus repairs when we're negotiating with these sellers. In this market, and really any market, the profit is made when you buy, not when you just hope for the best. Second, if you wholesaling, you need to be taking this time right now to build stronger buyer relationships. Buyers can make or break this business for you. So you don't want to get stuck with your pocket buyers, the ones who have been so dependable for you in the past years, because they might slow down or even stop because they have all of this inventory that maybe they can't move, or all of their money is tied up. And now you need new investors to come in and buy your new deals, but you haven't been networking or trying to find or marketing to new investors. So this is what you need to focus on right now. If your sales are down, don't worry. You still need to stay active and continue to build strong buyer relationships. You can also reverse wholesale. Find out what your best buyers are looking for right now in this market, and then tune up your marketing to find those deals. Get on Facebook or reach out to other wholesalers, see if they're willing to swap lists with you. You need to be reaching out to buyers on a weekly basis. What are they looking for? What zip codes are they buying in? Has their price range changed? What rehab level are they interested in right now? Are they wanting full remodels that are busted down to the studs? Are they wanting light remodels? Or are they wanting turnkey properties? Find out exactly what your buyers want and then hunt for those properties specifically. Third, you can create the shifts from fast money to smart money. And this would mean incorporating some type of creative financing. If you can't get the numbers to work on a cash wholesale deal, try sub two, try novation, or even partner with realtors where you can refer them the deal and then y'all work out some type of commission split if it's a retail sale. Try to stay in control of the property without over leveraging yourself. Also, you need to be trying to add more and more value to all of your offers. Now, as traditional wholesalers, of course, we say we pay the closing costs, there's no realtor commissions, but it's time to get a little more creative. Maybe be flexible on move out timelines, and this could mean offering lease backs to your sellers, paying for moving expenses. I mean, whatever you can afford within your assignment fee range, but you got to get creative. We got to offer more out here. Put your focus on solving real life problems for these sellers, not just making offers. Ask better questions, deep dive on those conversations, really get in their business and see exactly what is going on in their lives, what is causing this distress. And besides the money from the sale of this house, what else can help them? And then figure out how you can plug yourself or your business into that and add more value. Lastly, you can double down on very, very motivated sellers. And you can do this by focusing on foreclosures, because it's a ton of those happening every month, inherited properties, tired landlords, divorces, code violations, all of these things where fees and more and more and more stress are piling up on these sellers. Focus on those type of deals and come in with a convenient, fast solution. Make sure you're only marketing to people who need to sell, not people who just want to sell or they're thinking about selling or they may be interested in selling or they kicking a tire just playing with the idea. No, find people who absolutely 100% need to sell their property today. Real talk, bro. This type of market is where investors are made. I personally got into real estate in 2020. This was right before COVID, and everything started to get sweet. Now, don't get me wrong, it was kind of weird because we couldn't do in person appointments, but the market started heating up really fast as soon as I got into real estate. So I kind of got spoiled a little bit. Everything was easy for me, the wholesaling, the fix and flipping. Everything was a lick, and then the market turned, but I'm able to adapt. So our business continues to thrive even in a downturn market. And I want the same thing for you. Anybody who says something like it's too hard right now or the market is just too crazy right now, I'm backing out or I'm stepping down, it's really just saying they don't have the ability to adapt. This is when you separate yourself. Anybody can wholesale in the hot market, but right now, I say in the next 12 to 18 months, a lot of people that you saw wholesale in the past couple years, they won't be in the game anymore. I'm seeing it happen with my own eyes. Pressure makes diamonds, and the best deals are under pressure right now, today, as we speak. Get focused, double down on your education, keep learning, build your systems and processes, and don't panic, bro. Buyer's market just exposes amateurs, but it rewards anybody who's actually building systems and processes. Believe me, I'm there. All the investors that you hear about who built crazy wealth between 2008 and 2010, they just kept on buying and kept on working when everybody else was sitting on the sideline scared. And now it's a big separation between the doers and the people who didn't. Remember, y'all, money is made when you buy, not when you sell. Adjust your strategies, stay hungry, be a solution for these sellers out here. If this helped you at all, man, drop a comment, tell me what strategy you're using, like this video, share it with a friend, and don't forget to subscribe for more gems just like this. Also, if you go down to the links in my description, I have a free ebook on how to wholesale real estate if you're a newbie. And if you've already gotten started, but you're feeling stuck in this market, you don't know exactly what to do next, what marketing could work for you, what steps you need to take, then you need to go ahead and also click the link in my description and set up a one-on-one consultation so we can coach you up and get you back in the game, my friend. It's your boy Real Estate Show, man. And until next time, tap in.